Hello, welcome back to Father and Son Investing. Today we're going to talk about Treasury bills. How do you decide which Treasury bill to buy? There's the 4-week, the 8-week, the 13-week, the new 17-week, the 26-week, the 52-week Treasury bill. Among all those choices, how should you decide which one is right for you? We're going to answer that question today. Now, this video will not talk about how to go about buying Treasury bills or the pros or cons of Treasury bills. If you're interested in those things, I have actually done 2 previous videos about Treasury bills, one talking about the advantages and one talking about the disadvantages. Just as a social statement, the disadvantages video has about 3 times the views as the advantages video. So if you're interested in that, go ahead and click on one of those or both of them. Today, we're going to answer the question, how do you choose which Treasury bill is right for you? In order to answer that question, I'm going to pose 3 additional questions. The first question that we'll talk about will be, how long do you have until you need the money? The second question will be, what investment rate return are you willing to accept? And as part of that discussion, we'll talk about the concept of maturity risk premium. The third question that we will then address will be the interest rate risk and how much of that are you willing to accept. If you're not familiar with any of these concepts, don't worry, we will talk about them. So let's get to question number 1. Question number 1 is, how soon do you need the money? If you can wait 52 weeks before you need your money again, then a 52-week Treasury bill might be appropriate for you. But obviously, if you need the money in 13 weeks, then a 17-week, 26-week, or 52-week Treasury bill is not going to be right for you. So that is the first question you need to ask yourself, how soon do I need this money? Once you've determined how soon you need the money, then the next question you can ask yourself is, what rate of return are you willing to accept? If you go to the Treasury Direct website, they will give you the most recent auction results. In this case, it's the 20 most recent results. What I've done here is used Excel to help me sort the data just a little bit differently so it's easier to start to compare the investment returns here. Immediately, we can see that certain Treasury bills are auctioned in tandem. For instance, the 4-week and the 8-week Treasury bills are auctioned on the same day. Additionally, we can see that the 13-week and the 26-week Treasury bills are auctioned on the same day. Now, seeing this helps us start to realize that there are different rates of return on different Treasury bills auctioned on the same day. Turning to the November 1st, 2022 issue date, we will see that there were 3 Treasury bills that were auctioned for that issue date. And we see that the highest rate of return was for the 17-week at 4.3%. So if you were desiring a higher return, you might have chosen the 17-week Treasury bill for that particular issue date. This leads us to the concept of maturity risk premium. For accepting a longer period of time that you're willing to invest your money, you receive a higher rate of return. Now, for the most part, this is true, but there are times when you will hear someone talking about the yield curve inversion, where the 2-year bond is paying more than the 10-year bond. But in general, you will see that investing for longer periods of time will grant you higher rates of return. What I've done here is just taken that same Excel spreadsheet data and turned it into a chart so that we can start to talk about interest rate risk. If we go back to the October 11th issue date, we'll see that the 4-week Treasury bill was just shy of 3%, while the 8-week Treasury bill was around 3.3%. However, if we fast forward to the November 1st, 2022 issue date, we will see that now the 4-week Treasury bill interest rate or rate of return is approximately 3.6 something percent, while the 8-week Treasury bill is now approaching 4%. If we go backward and compare, then you will notice that the 4-week Treasury bill currently is paying a higher rate of return than the 8-week Treasury bill was back on October 11th. This presents the concept then of interest rate risk. When interest rates are rising, as they currently are in the United States with the Fed trying to quell inflation by pushing interest rates up, there is a chance that a purchase that you make now of a bond or a Treasury bill will have a lower interest rate than the next future sales will. What does that do? It pushes the value of your bond or bill down because someone purchasing a new bill or bond can get it at a higher rate of return. This chart here, I think, explains this concept even better. This is a chart of the 2022 daily Treasury rates. Now, these are not the auction results. This is what the Fed says that a Treasury bill is worth on any given day, and this is for the whole year of 2022. From this graph, you can see just how quickly the yields, the rates of return, have been rising, such that if you had purchased a 52-week Treasury bill, say back here on July 4th, that'd be a great day to purchase a Treasury bill, you will notice now that the current yield or rate of return for the 4-week Treasury bill now beats that 52-week Treasury bill rate. So you would be holding on to a Treasury bill that wouldn't mature until July 4th of 2023, and it would be earning less than somebody who was just purchasing 4-week Treasury bills, at least at the moment. We don't know in the future what 4-week Treasury bills will be doing. Obviously, should the rate of return steeply decline here in the near future, you may be very happy with your 52-week Treasury bill purchase. So those are the 3 questions in my mind that you need to ask before you decide which Treasury bill you want to buy. Number 1, how soon do you need the money? Number 2, what rate of return are you willing to accept? And number 3, what interest rate risk are you willing to accept? I'll tell you what I did with my most recent Treasury bill purchase. It was back on October 11th. I went ahead and opted for the 8-week Treasury bill because I knew that the return would be higher than the 4-week Treasury bill, but I didn't want to lock myself into something really long. So I'm going to really consider hard on my next round of Treasury bill purchases whether I want to buy 8-week again, or whether I want to stick to maybe the 4-week, knowing that interest rates will still be on the rise. The Fed just raised the rate yesterday, and they're anticipating that in December, the Fed will raise the interest rate again. If any of this information was valuable for you, please give us a thumbs up, and please share this information with a young person in your life. Treasury bills are a great way to get a guaranteed rate of return, and if the young person needs it in a short amount of time, a Treasury bill can be much better than an I-bond potentially. Until next time, enjoy your investing.